righty. Well, greetings, everyone. My name is Rob Holcomb, and I'm an extension educator with the University of Minnesota. And I'm going to be one of two folks presenting on this webinar today. The topic we're addressing is Form 1099. There's a variety of forms and a variety of circumstances where you would need to issue those things. Our speakers, the speaker here today is Kevin Burkett. He's with Clemson. Kevin, if you want to advance that one, what we'll do is I've got some introductory remarks here. This is essentially put together by ruraltax.org. Now, what ruraltax.org is we maintain a website, but pretty much ruraltax.org is made up of what we affectionately call the Publication 225 Committee. Now, for those of you, many of you are going to recognize Publication 225 is the Farmer's Tax Guide. And a little bit of history on that. The Farmer's Tax Guide actually started out back in 1948. It started out as a North Central Extension publication. And in 1955, IRS took that publication over, and they've been publishing it ever since then. Now, we have a unique relationship with Internal Revenue in that each year, the committee, which is right now currently is comprised of 14 members from all across the country from land-grant universities, we do a complete review of the prior year Publication 225, and we, in non-COVID times, we go to Washington, D.C., and we actually sit down with IRS for a day and do some intensive review of the content, both, looking at it from a technical standpoint and how it might be better to possibly change the writing with that. But we are the only committee, and that's the only publication where that type of a relationship exists. So it's a lot of history, and there's actually a lot of quite a bit of people power behind this as well. Most of us that are on the Publication 225 committee, we're tax school directors with our own respective university and everything. So what we want to do right now is I'm going to hand this off to Kevin and let him hit the presentation for a little bit, and I'm going to pick up about partway through.
And actually, if I could make a couple of housekeeping announcements before we get going here for all the participants. Thanks for joining, everyone. I'm Sarah Campbell. I'm USDA's National Beginning Farmer and Rancher Coordinator. I'm also the one helping lead our taxpayer education effort. So just a reminder, in addition to ruraltax.org and all the materials that Kevin and Rob are going to talk to you about, we have a bunch more resources on farmers.gov/taxes, and there'll be more webinars. There are also previous webinars that have been recorded, and everybody can access everything there. And also, this webinar is being recorded. Please put your questions in the Q&A, and we'll go through those as we go along. And we've also saved time at the end for discussion. The recording does take us a little bit of time because we actually caption and transcribe this and kind of clean them up, and then it'll get posted online. And once it's posted online, it usually takes us about 2 weeks. We email everybody who registered for the webinar and send them a link to that recording, a PDF of the PowerPoint slides, and any accompanying fact sheets or materials that Rob and Kevin covered today. So don't worry if you miss it or you join late or you just want to be able to go back and watch it, you will be able to, and you'll get an email. So with that, I'll hand it over to Kevin now.
All right. Yeah, thanks, Sarah. So I think Rob mentioned kind of the Rural Tax Group, and that is the website for the group there, ruraltax.org. And also, if you scan the QR code with your phone, that would also take you to the website. And so you'll see a number of articles on that website. We're going to reference one or two, I think, throughout this presentation. There's one on 1099 informational returns that was filed recently this year. So you may want to take a look at that. But there's an archive of old articles, and then things are constantly being updated as well. So just sort of the quick rundown of today. We'll talk about the form and kind of the significance of it. We're kind of approaching this from a farm business management perspective. So what are the common situations that we see in agriculture, and what are common situations that we have to deal with in relation to the 1099 form? We'll cover the requirements of the form, that what do we need to do to be compliant? And then how do we, once we know a little bit about the rules and regulations and everything, how do we actually practically apply this and make sure the forms are filed correctly and everything like that from a management perspective? So I think we kind of touched on this a little bit, just a little bit about the project and the program and everything that we're doing with these tax education programs. And we should also kind of mention a disclaimer of none of what we are presenting today should be considered formal legal or tax advice, but we're solely doing this for educational purposes. So we do want to inform you about the rules and laws and everything as they exist, but we would always encourage you to reach out to a trusted professional and have someone that you consult in regard to your business, because it's all facts and circumstances based, and just a change of a couple details in regard to your business could change how these things are treated for tax purposes. So again, we do want to do the educational piece and go through this material with you, but we would encourage you to reach out to consultants that can help you individually. So just a brief history lesson. The 1099 form has actually been around for quite a while. So in 1917, this was the time when World War I was going on. And so they were trying to raise revenue and raise funding for the war effort. And so they had passed the War Revenue Act of 1916, which increased revenues some, but then they came back the following year and passed the War Revenue Act of 1917. And so that increased the funding and the tax revenue even more so. And so part of that act is they started requiring businesses to track payments to other businesses if it exceeded $800. And so basically in that act, that was the creation of the 1099, and they've basically been filed ever since then. So really there's some history there, and it's been around for over 100 years at this point. So $800 is what it used to be, and I kind of looked that up and kind of compared it to today's dollars, and that would be anywhere from $18,000 to $19,000 for today. So it was a significantly larger threshold, I guess, all things considering, and we'll talk about what the thresholds are now. But just kind of thought that was interesting as I was looking up information for today's presentation. So the significance and why we're kind of touching on this topic, it helps a farm report income that they earn and receive during the year. So we'll talk about common situations where we're going to receive a 1099, and ideally through the books and records that we have for the farm, we're going to have this on hand already. But if we receive 1099, it should basically confirm what we've already recorded for the business. In the same way, as we make purchases and have expenses during the year, it's going to help us report our farm expenses. And as we'll see, failure to file the form could lead to significant penalties if it's not done correctly and timely and things like that. So that's why it is significant for us. But it is a purely informational return. And so this is just one example of the 1099, and there's a number of variations, but this is the 1099 miscellaneous. That's just a copy, a screenshot there. But sometimes we think about if we're making estimated tax payments, or if we're actually filing our return, we might be sending money in with that to the IRS. But this is purely an informational return. So the form itself does not send any money to the IRS or to the recipient, but all it does is indicate that a transaction or transactions occurred during the year. And as with most forms, that you would see on the IRS and that we might use to file our tax return, they also include instructions for the form. And so there are, again, other variations of this form, but the 1099 miscellaneous and the 1099 NEC, and we'll go into a little bit more depth on those. These are the instructions for this form. And so these are the things that generally they're shorter documents. They might be 4 or 5 pages or something like that, but typically it's going to go kind of line by line on the form itself and tell you what should be input in those boxes, maybe what should not be input in the different boxes. It might make reference to some other publication and educational materials on the IRS website. So pretty much anytime you're taking a look at an individual tax form, you would also want to check the instructions for that. So again, this is just a screenshot of what you'd find on the IRS website, but this is the instructions for those forms. And you can see it's already sort of making reference. It says Form 1099 NEC Box 1, so on and so forth. And so it notifies the recipient of the payment, and it notifies the IRS of the payments to the recipient. So the recipient, very likely on their books and records for their business, they will have already recorded, for instance, the sale or the item of income that they had during the year. But again, they'll receive this form to kind of confirm that's what occurred during the year. And then the IRS also receives a copy of that payment. And again, it's not actual money, but it's just to confirm that these payments occurred between the business during the year. So generally, you're going to have 4 copies of this form. So one of the copies would be for you personally or for your business. One will be to the recipient, so whoever you made the payment to. One would go to the IRS, and then generally one will be filed with the state as well. Sometimes that's not always required, and as we'll see, sometimes we don't have to, sometimes that's automatically done for us and we don't have to actually send it to the state, but we'll talk about that in a little bit more detail later. So generally there's going to be 4 copies of the same form that get sent, and we keep a copy as well. And again, we're approaching this from a farm business management perspective. So some of the other forms, the thresholds are a little bit different, like interest and dividends and things like that. It's if it exceeds $10, but we're primarily focused on like the 1099 miscellaneous and the 1099 NEC. So when we have payments of $600 or more for rents or services, that's when we have this filing requirement for a 1099. So it's not for products and goods, and it's not if you made a personal payment of $600 or more. So one example would be someone came to paint your house for you. That's more of a personal expense, and so you might have paid them $800, for instance, but that's a personal expense, and no 1099 has to be issued in that situation. But let's say another scenario would be they actually came to your operation and they painted your barn for you, and you paid them $800 during the year. Okay, now that's a business to business payment. We've exceeded that $600 threshold, and so now a 1099 is going to be filed. So we'll discuss some more common situations for filing, but just kind of wanted to give you some basics there. And another question might be, well, what happens if we had payments from our business to another business, but it did not exceed that $600 amount? So in the books and records of your business, you would record, let's say the payment was for $500. You would record that as an expense on your books and records. And for the recipient, they would record that as $500 of income or $500 of sales, but no formal filing of this form is required. And you can file the form even if it's below that threshold, but it is not required. So really if you administratively, if you're used to filing that form and for whatever reason, let's say most of the years you have a payment to veterinarians that exceeds that amount and you're used to filing that form, but this year it was $450 that you paid to the veterinarian, you may be used to filing a 1099 and send it anyway. But just know that in that particular instance, it's not necessarily required. So it's got to exceed that $600 amount. Generally, the forms are not required on payments to corporations, either S corporations or C corporations, government agencies, or tax exempt organization. Now, that does say generally because there's a couple of exceptions to that, and I think we'll talk about one or two in a little bit, but just know for the most part, that holds true. So not on payments to corporations, government agencies, or tax exempt organizations. So first we'll talk about when and how, like what are common situations that we see where the farm business might receive a 1099. And so if you participate in crop insurance and you receive proceeds or a payment from that, you would get a 1099 miscellaneous. If you participate in government programs, and this could be from a local, a state, or federal standpoint, but if you receive some kind of payment from that, you would receive a 1099-G. If you had, if you rented out land, or if you rented out equipment or any kind of rents, you would receive a 1099 miscellaneous. Something we see quite a bit in agriculture would be doing like custom work. So this might be disking a field for someone. This might be spraying for someone. It might be some kind of harvest work. You would receive a 1099 NEC. Consulting, it says 1099 miscellaneous, but that would also be a 1099 NEC actually. So, sometimes people are crop consultants or something like that, 1099 NEC. And if you participate in a co-op and received a patronage dividend, then you would receive a 1099 PATR. But just because you receive a 1099, that does not necessarily mean all of that is taxable and taxable income to you. In fact, you'll see on the Schedule F 1040 tax form that in certain boxes, it will say this was the amount received and this is how much was taxable for this particular year. So it kind of depends on what the payment was for, maybe who the payment was from. And you might have to do a little bit of research to figure out, okay, I've received this 1099, I've recorded it during the year, is it taxable? Is the full amount taxable? Some of those questions. And that's where, having that business consultant, that tax preparer that you can have those conversations with comes into play. But generally, most of these are going to be reported on the 1040 Schedule F. Some of the ones that we just talked about, while we see them commonly in agriculture, they might show up on other forms. So like the rents for land, non-employee compensation, and consulting, these would end up on forms like Schedule E or Schedule C. So we weren't going to get into that a whole lot, but just kind of a reference there. And you may also get into a situation where you receive a 1099, but it was actually supposed to go to someone else. And this is what they call nominee reporting. And so in the instance that has occurred, then it becomes the responsibility of whoever receives the 1099. So in one sense, you might think it'd be the original issuer, or you might have a filing requirement there that you're not totally aware of. And so that's why we wanted to cover this and talk about this a little bit. But one example might be you are renting land from someone and the land is enrolled in some kind of USDA program, and the payment was sent to you who is renting the land, and you received the 1099, but it was actually supposed to go to the landowner. So in that instance, you would send the payment and then remit the 1099 to the landowner. So there could be a handful of situations where we might see that pop up. But again, that's what they call nominee reporting. And it's like, if you recognize that, then you want to make sure that that form gets issued and sent from you to the correct recipient. If this occurred between spouses, so let's say it was in the wife's name, but it was supposed to go to the husband or vice versa, no nominee reporting is required in that instance. So receiving a 1099 form is fairly straightforward. Once we have received it, we'll figure out where it's supposed to be on the tax forms, like the Schedule F and so on, and make sure it's reported correctly, but it's fairly straightforward. And again, a lot of that information we would already have recorded through the books and records of our farm business. But the issuing side of these forms is where it's a little bit more, we have a little bit more administration to do. And this is where we can start to get into situations where we might have penalties and we want to make sure we're filing correctly and things like that. So a lot of these situations are kind of similar to what we just talked about. Again, we think about rents occurring fairly frequently in agriculture, both for land, possibly equipment. Again, you might have someone that comes to your farm and does custom work. So they harvest or they disc or they spray or something for you. That would be a 1099 NEC. Veterinarians, especially for those operations that have livestock, that's going to be a pretty common payment. And then accounting and legal fees. So if we do have those business advisors that we work with throughout the year, and we're being charged fees for that, then we would issue a 1099 NEC. And again, this is in the case that these payments have exceeded that $600 threshold. And so I think at this point, I was going to turn it over to Rob, and he's going to cover some of these next slides for us.
All right. Well, thank you, Kevin. Thank you, Kevin. Just before we go too much further, you always come up with stuff that you think of when you get rolling on these things. So far we've talked about the mainly from the issuing standpoint. For instance, if I'm the farmer and I have, I paid rent, I paid a contractor to paint the barn, and let's just use those two examples. They were both over $600. Individuals are not incorporated, and so then we end up having to issue 1099s to those folks. Now, we know that those 1099s are going to get sent to the IRS, and in most cases going to get sent to the state as well, wherever the individual that resides, that'll be that applicable state. Now, ultimately, what ends up happening is that information gets inputted into the IRS computer. And then there's what there is when the return gets filed, when the individual that received that 1099, because it was reported to IRS, when they file their return, the IRS computer is going to try and find that money somewhere on that return. In fact, when I first was trained to do taxes, that was one of the first things I think on day one that I was taught, is that when you have the client, when you have the client paperwork and everything there, the first thing that we did was we got cleared a spot on the table and took all the clients' 1099s and laid them out and marked, all right, these are going to go on the F, and if there was another schedule, these are going to go on the E, and we sorted them all out. Because as the practitioners, the practitioner's job is to get that money reported on the tax return so the IRS computer can find it. Because if it doesn't, then you get an IRS notice, and then you end up, having to explain stuff. It doesn't automatically trigger an audit, but it will get you a letter, and they'll say, hey, we think you have unreported stuff here. So that's where this all ties back in together. Now, let's talk veterinarians here a little bit, because veterinarians are a little different from everybody else. As far as veterinarians go, you need to give them a 1099, pretty much whether they are incorporated or not. All right. So they're going to end up getting a 1099 whether they're incorporated or not. Now, in the case of the veterinarian, it's not only the services that the veterinarian provides, it's also the products. So if you had a bill for that particular if you had a bill for services from the veterinarian, and you had a bill for medicine also, that's still all going to get reported on the same 1099. And for veterinarians, what's different about this is it goes on a 1099 miscellaneous. There is a box 6 on the 1099, and that's for medical and healthcare payments, and that's where the veterinarian stuff gets reported. All right, it gets reported under medical and healthcare payments, which is box 6 on the 1099 miscellaneous. Now, one other thing that I want to mention here as well, because veterinarians get paid, get issued a 1099 whether they're incorporated or not. There's another exception to that as well, and that's for attorneys. Okay, for an attorney or a law firm, if you have business expense going to those individuals, that they get a 1099 over $600, they get a 1099 whether they're incorporated or not. All right, so your two exceptions for that are going to be the veterinarians and attorneys and law firms. Those are the two things that are going to get 1099s whether they're incorporated or not. All right, and I think Kevin, yep, he did. Let's move on here just a moment. Now, talk a little bit about the 1099 miscellaneous. Now, these are just some global situations that we have here. Now, in the farming situation, probably the most common thing that a farmer is going to issue a 1099 miscellaneous for is going to be for land rent. All right, if you're leasing a parcel of ground and paying, say you're paying cash rent for that particular piece of property, and of course you have a landlord that you're paying that amount to. Now, where this kind of comes into play is the farmer in this case needs to be proactive, because we oftentimes get into situations where, and I've seen this when I've been in active practice, the client calls up and says, hey, the landlord, because we're we're in January and it's time to issue 1099s, get a call and say, hey, my landlord won't give me his social security number. And there's there are things that we can do about that further into the program, but the simplest way to combat that, folks, is get that information to issue that 1099 before you give them the check. That's the simplest thing to do. A lot of times these are done with a handshake agreement type of thing, and we run into this frequently if you're in active practice, with farm clients. You'll run into folks and they don't want a 1099. Now, we don't want to get into a big ethical discussion, but hey, let's face facts. The reason they don't want the 1099 is they're probably not going to report it on their tax return. And they don't want that cross-checking going on. So just as a word of being proactive, collect that information up front. Get it up front before you write them the check, because after you write the check, you don't have a whole lot to bargain with on that at all. So moving on here.
I was just going to jump in, Rob, and say I think And two, sometimes I think a situation might be they might be renting land from a family member or something like that. And as Rob said, it's kind of more of a handshake agreement. And maybe they pay them at the beginning of the year and it's pretty informal and everything like that. And they just kind of go about their business and don't think much about it. But in that instance, assuming that it's exceeded that threshold, still you'd want to issue that 1099 because if if later on your tax return, for instance, you indicated, yes, we had $1,000 of rent expense, but there was no 1099 to go along with that, I think to Rob's point, that might start to raise some questions and everything like that. So not always is it intentional necessarily. It might just be, not much thought about it, but we do see rents quite a bit and it might be more of a personal relationship with the landowner. But I think sometimes taxpayers can get into that situation.
Yes, sir. Thank you, Kevin. All right. Now, the next slide that we wanted to talk a little bit about is the 1099 NEC. Now, we are going to talk more about this later, but just some global notes about this. Now, this 1099 is still relatively new, and we'll talk about that a little bit later, but this is mainly for non-employee compensation. What we used to have is there used to be a non-employee comp box on the 1099 miscellaneous, and that's where that got reported, and it was that way for years. Now we've got a completely separate 1099 for non-employee compensation. Now, what this discussion actually warrants is what's an employee, who's an employee and who's a contractor, because that's where we really need to be conscious of which is which, because employees, we're going to give a W-2, we're going to issue a W-2 to employees. Contractors, we issue 1099s to. All right. Now, thank you, Kevin. Generally speaking, the motivation with farmers, and it makes sense, 1099s are just a whole lot easier. You don't have to do federal withholding. You don't have to do FICA. You don't have to do Medicare. You don't have to mess around with state withholding, and you don't have to make quarterly or monthly tax deposits. So it's just a whole lot simpler to do a 1099. So it's not hard to understand why folks would be motivated to, well, gee, I'd rather just give the person a 1099 instead of horsing around with the W-2. So that's the motivation for it, but that's not what decides it. That's not what decides it. So moving on to the next one here, what we have is, IRS has some ways to determine whether you're a contractor or whether you're an employee, and we'll get, and that's coming up on the very next slide. Now, if you're really confused about this, there is an SS-8, and what that is that's a determination form for determining worker status for federal unemployment tax and income tax withholding. So you can do an SS-8 to determine whether somebody is or is not, but my guess is that between you and your tax professional, you're probably going to be able to figure that one out on your own. But moving on to the next one, the IRS, and what I do also want to point out is just literally within the last 4 weeks, IRS did issue some new temporary regulations for employees versus contractors. Now, I've scanned over those documents and they really don't change anything with what we're going to be talking about today. It does, in the farming situation, it really isn't touching that all that much. But the three things that we look at when trying to determine whether somebody is an employee or a contractor is we look at behavioral control, financial control, and relationship of the properties. Now let's take each of these separately, and we'll go on to the next one here. And as far as behavioral control, now let me use an example. I'll use a personal example here. Now, first of all, I don't farm, but we did have a lot of storm damage. You probably heard about the Midwestern storms back in May. In fact, 2 weeks ago, I had a brand new roof put on my house. All right, and hired a contractor to do that. Now, I don't farm. This is not a business situation, but if I were hiring a person under these circumstances, a contractor like this, it would be applicable. So when my contractor came over to do the roof, all right, I was not out there giving them instructions on how to rip the shingles off and uh, how to shingle, how to put the shingles on and all that sort of stuff. That as a contractor, I'm not giving them all those instructions. I'm also not up there training them. Trust me, anybody that's ever watched Tool Time, I'm that guy. I mean, you don't, me with a hammer is dangerous, but I wasn't doing any training along those lines. All right. And that's how one of the things that you differentiate between a contractor and an employee. Now, if I have an employee, I'm going to be providing instructions. I'm going to be providing supervision. I'm going to be providing training. And that in a contractor's type of situation, we're not doing that. So the second item here is the financial control. All right. As far as the financial control goes, does this contractor, do they have significant investment in that? In other words, are they showing up with their own tools? All right. Now, an employee, when you hire an employee, the employee is going to be using your tools. I mean, you don't normally hire an employee and then say, oh, by the way, you got to bring your own tools. Now, there's some shops where they do that, but that's not typically the way that's done. But does the contractor have significant investment in their equipment and everything? Are there unreimbursed expenses? When I hired the fellow that I hired to do the roof, his name is Todd. When I made the agreement with Todd bought the shingles, Todd bought all the supplies to do the roof. I didn't do any of that. What I ended up doing is I ended up getting a bill for the whole thing when they were done. I didn't have to go out and buy supplies for him, and there were, he didn't have unreimbursed expenses or anything like that, like what you would have with an employee relationship. Todd's services are open to the market. He does roofs for, anybody in the area. He also builds houses as well. Method of payment, I paid him at the end. Now, an employee is going to get paid normally an hourly wage, and they're going to get paid probably weekly or every other week in most cases. And in Todd's case, as being a contractor, he has an opportunity for profit or loss. Employee, we don't worry about that because employees are getting paid normally by the hour, and that's how that's going to work. So third thing is the relationship of the parties. So was there a contract in place for this roof that I had done on my house? Well, yes, there was, because we had email exchanges before when we decided to go with Todd for the roofing job. He sent me an estimate. I worked with my insurance company for the estimate, made adjustments and everything, and communicated with him via email saying, yes, we're all in agreement. Go ahead, and we're going to go ahead and do it. And that's actually constitutes a contract. Employee benefits are generally only supplied to employees. All right, I'm not providing health insurance to the contractors that were doing the house. As far as discharge and termination, I can't go up on the roof when his crew is up there roofing the house. I can't go up there and say, all right, you're fired. It's because it's a contract job. All right, so I don't have the really the authority to go up there and micromanage this thing. And is it part of their regular business activity? So if it's this, to be an employee or a contractor, I always refer to this as the duck test, DUCK. If it walks like a duck, it's got to walk like a duck, talk like a duck, and look like a duck, and then it probably is a duck. So you have these 3 tests to look at in order to determine whether they're an employee or a contractor. All right. NEC, we talked about this a little bit earlier. It's a relatively new form. It's only been around since 2020, but it's mainly for contractors, for consultants also. Consulting also works under this, and it's primarily as non-employee compensation is what that's for. The let's advance this thing. Yeah, advance it one time, please, Kevin. Okay, here's a peek at the 1099 NEC. And this is a generic form. You'll see there, box 1. That's where the non-employee comp goes. Now, personally, I mean, I see one of these every year. Now, I'm an employee of the University of Minnesota. I get a W-2 from the university, but I also I personally do some writing for a couple of national textbooks, and I do that outside of my day job. And the way I get compensated for that is I have about late January, I'll have a 1099 NEC that's going to show up in the mailbox, and that's what reflects my compensation for that book writing, because that book writing is not that has nothing to do with my day job. I do that as a side thing. Next one, please, Kevin. Okay, let's get into tax identification numbers here, or a TIN. This is the information that you need to gather from that person you're going to issue the 1099 for. Now, I know we talked about this a little bit earlier. This could be the Social Security number. It could be an ITIN, which is an individual taxpayer identification number. Now, most cases where you're going to find those is if you have a new person to the country, or a relatively new person to the country. Perhaps they might be a migrant worker, possibly a migrant worker that's relatively new to the country. Oftentimes they'll have an ITIN where they're not going to have a Social Security number, or you might have somebody with an employer identification number. Now, I've always been an advocate for encouraging people, if they're in business, have an employer ID number. That way your Social Security number isn't floating around on forms all over the place. And in today's identity theft time and place, I think that's just a good idea. But you do need to collect that. The payer issuing the 1099 has to have that tax ID number for the recipient. The appropriate way to do that is through a form W-9. You provide the W-9 to the recipient, and that's where they give you their complete name, their address, and their tax ID number, be it a Social Security number or a tax ID number. That's the appropriate way to do that. Now, here's the way that you can, if you have somebody that just refuses to give you the tax ID number, you can do backup withholding on that. And the backup withholding is 24%. You end up filing a Form 945. Now, essentially what you're doing there is, as a rule of thumb, let's say that you owed the landlord $1,000. We'll just keep the numbers small but simple. If they didn't give you a tax ID number, you can back up withhold $240 out of the $1,000. And what you do is you end up sending that into the government. And that's supposed to cover the tax bill for the landlord. Now, I will say up front, a lot of people are reluctant to do this, because if you're a farmer and you do that to your landlord, how long do you think you're going to rent that ground for? And that's the answer to the question. So, but by the letter of the law, this is what you're supposed to do. it goes back to what we originally talked about earlier. Get the numbers before you write them the check. All right. Get that W-9 before you make any payments, and it just helps minimize those issues. All right, next one, Kevin. Okay, deadlines. Essentially, let's start on the bottom one. Your 1099 miscellaneous is due on February 15th. Your 1099-B, that's going to be a broker statement that is going to come usually with an investment type of thing, like an investment statement that's going to come in there. 1099-S, that's going to be for a real estate transaction. So those 1099s are due February 15th. Everything else along the 1099s are all due January 31. So for farmers that are filing by March 1, if these things are in hand by then, it can get a little bit tight on the February 15th ones, but it still gets you there. Next one, Kevin. Yeah, and as far as penalties go, Kevin, I think we're gonna hand this back off to you. So
Yeah, sounds good. And I was just thinking, like, for this, if you are filing the forms to recipients just as sort of a blanket statement, we do have the couple that are filed by February 15th, but if you just wanted to say, well, I need to get all the 1099s to recipients as a blanket statement, I mean, assuming they're all filed by January 31st, you'd be covered in that instance. And really, I don't think of 1099Bs or 1099Ss as something that we necessarily have to comply with very often. But the 1099 miscellaneous, obviously that one's pretty common. So again, just as like a blanket statement, you might say, well, I'm going to try to get all my 1099s to the recipients by January 31st. But yeah, so we do have to provide that copy. We talked about the 4 copies earlier. So we do have to provide that copy to a recipient. And the penalty is the same as if it was not filed timely with the IRS. And I know we haven't touched on that yet, but that is the next section. So as we said, we've got the recipient copy, and then we've got the copy that goes towards the IRS. So a couple things to note here. The 1099 NEC, we just kind of went through that form a little bit, the newer form. It's required to be filed by the end of January, so January 31st. If we're filing by paper, all other 1099s would be issued by February 28th, so the end of February. Or if we're filing electronically, then we have basically another month to file those. And so we'll talk a little bit more about the difference between paper and electronic. But again, so by paper, February 28th. If it's electronic, then we get until the end of March to do that. But the 1099 NEC, whether it's by paper or electronic, has to be by the end of January. And so, we said whether we fail to file with the IRS, whether we fail to file with the recipient, we do incur penalties if we did not do that timely. So it's $50 per return if you are within 30 days. So, one example would be if we were electronically filing and we had until the end of March, but for whatever reason, we did not get to file until April, then we've got $50 per return as a penalty for that. And we've got an example where we'll talk about this a little bit more. But if we get past 30 days, but it's before August 1st, it jumps up, and a little bit more than double, it jumps up to $110 per return. So we're past April, for instance, but we're before August 1st, $110 per return. And then it jumps up even one more time if we are past August or did not file the return. So it jumps up again, more than double. It jumps up to $290 per return if we are out past August. And there is something that they can, an additional penalty that they could add on that they say is intentional disregard. And so this is where really you maybe knew about 1099s, you knew that one should have, or you knew one should be filed, but just basically ignored it and disregarded it, this would be $570 per return. So it starts to become even more significant now. This is a greater like burden of proof, I guess you might say, to be able to hit you with this penalty. But it is something where if people said, well, I'm just not going to worry about it, that might be a situation where you would see this intentional disregard penalty. But as a quick example, let's say you had 5 forms that needed to be filed, and for some reason we got delayed. Maybe we were waiting on Social Security numbers, whatever the case may be, but we didn't get to file those forms until June. So we've got 5 forms. We did not get them to the IRS, and we did not get them to the recipient. So we've got, we hit that second piece, like the increased penalty. And so we're up to $110 because we're past 30 days. So we've got 5 times 110 for the ones that were supposed to be issued to recipients. Same thing for the IRS. So we are looking at a penalty of $1,100 in that instance. And I would say in some cases, this is you might have a low number like 5 forms, but in some case, businesses might have a lot more than that. And so if you start to become tardy on those, these can really start to add up. But just as a practical piece, like record keeping software it does a pretty good job of trying to help you keep track of this information. So if you've got someone listed as a vendor in your system, then you might make payments to them periodically. They'd come and do repairs on your farm or something like that. They might be sort of a handyman. And let's say you paid them $300 3 times, then okay, they're at $900, right? But so one time was in March, one time was in June, one time was in July. That software will keep track of that and kind of raise a red flag in the system and say, according to our records, Joe Smith, the repairman that you have paid these payments to during the year, they've exceeded that threshold, and a 1099 is most likely needing to be issued for this purpose. And so it may, in fact, help you file the forms. I think it just depends on the software, and it might be something that you have to add on to the software as far as like an additional purchase or something like that. So you might just have to investigate what your system is and those kind of things, but it can help you keep track of this information a little bit. And the other thing we did just mention, like the deadlines for getting the recipient copies out and for getting the copies to the IRS, but even just putting notes in your phone or something like that, so that by January 15th, it gives you a reminder to say, hey, I need to get these 1099s out to the recipients. Again, just to help you be timely and that sort of thing. You can ask for extensions of time to file these. So for a recipient 1099, you can send a letter to the IRS, and I think it would be maybe a 30-day extension. If you needed additional time to file a copy with the IRS, you can use Form 8809. Now, I think there does have to be some justification of why you're asking for an extension. Maybe it's some kind of computer issue or business issue or something like that, or some kind of illness. But I don't know that it could just be, well, I need more time. So you probably want to have some justification for that, but we can get an extension. And this is something you'll see through the IRS website. It's what they call FIRE, the Filing Information Returns Electronically. And so if you are required to file 250 or more of these 1099s, then you are required to file those electronically. And so this is one way that you can do it, is through the FIRE system with the IRS. And there has been some talk about them even lowering that threshold, and I don't know what that would be, if it'd be 100 returns or what have you. But at this point, it is still 250 returns. And so if you are required to file electronically, but you fail to do so, you would be subject to those same penalties that we talked about earlier, because it's basically like you did not timely file the return. And so you start to get into those same, 30 days, past 30 days, and so on. And so if we're talking electronically filing and we're at 250 returns and we're at, say, $50 per return as far as penalty, or $110 per return as far as penalty, you can see that those can quickly add up, and that can be a pretty significant amount. Now, not every business is going to be that high as far as the number that they have to file, but again, just something to be aware of. Now, this is something that on the IRS website, it appears to be a newer system that they're trying to have out as well. And so this will be available beginning in 2023, basically the first part of the year. I think the fire system, when we're talking about 250 returns, that's a larger number. It's more of like a batch system that you would upload. Whereas the IRS system, they're really trying to encourage people to electronically file anyway. And so this could be for more small volume taxpayers. I don't know if that would be like 5 to 10 or something like that, but still they're trying to encourage people to electronically file. And I think that makes sense. Like we saw earlier, where the deadline for paper is the end of February, whereas the deadline for electronic is the end of March. So I think they're wanting more and more people to do that. And if you are filing by paper, you also have to include Form 1096. And basically, this is just a summary of what you are filing as far as informational returns. So you can kind of see the information that it's talking about there. And it's basically just a summary of what information you're sending into the IRS. But that's only required if you are filing by paper. And they have what is called the Combined Federal State Filing Program. And so again, maybe another incentive for us to electronically file, but when they receive that, then they will automatically remit it to certain states. Now, not every state is participating in this program. So depending on your area or where their 1099 contractors are, you might want to check and see if they participate in this program. But and in this case, I think it's, for here, I'm in South Carolina, but somebody that's close to the border of North Carolina or close to the border of Georgia, they may ask them to come do a job for them in South Carolina, for instance. Well, the 1099 would go to wherever that contractor is located. So if it was in North Carolina, the state copy of the 1099 needs to go to North Carolina. If it was in Georgia, the state copy of the 1099 needs to go to Georgia. But again, you may want to check and see if they participate in this federal state filing program, because if once that information is filed with the IRS, it may automatically go to that state. So without knowing, where everyone is located and things like that, we couldn't really speak to that. But I know for here, like North Carolina and South Carolina both participate in this program. But so pretty much we're close to the end of this, but generally a business is going to be impacted by 1099s, whether that's you are receiving payments throughout the year and you're going to be issued a 1099, or very likely we're going to have expenses and different things that we have paid other contractors for, and we're going to have to issue these 1099s. And so I feel like it's important for farmers and business owners in general just to understand the requirements. And that's why we try to have tax education webinars like today. And maybe the first step to this is just being able to have accurate business records. So we know what's essentially coming into the business during the year. We know what's going out of the business during the year. And like you said, some of those record keeping softwares and things like that can really help you keep track of this information, make sure that you don't run afoul, you don't maybe get into penalty situations and things like that. So having those accurate business records can help with a lot of things, but especially if we're talking about making sure we're being compliant as far as the tax rules and things like that. And so for a farm business owner, it's not to say you couldn't do it yourself, but I think having a willingness to either learn the rules and really understand it and spend the time, administratively to actually file the forms, or most of the time as a farmer, as a business owner, you've got a lot of things taking up your time already. And so having that trusted professional that you can turn to, and you can have an understanding of the rules, and we think that's an advantage, certainly, but someone that does it day in and day out that can handle this piece for you, maybe a little bit of stress relief for you, so that it's being handled by someone that does this on a regular basis. So I think we referenced a couple of these throughout the presentation, but really the IRS, they have a lot of good information on their website. The Pub 225, which is the Farmer's Tax Guide, you can find a lot of good information there. Certainly the Form 1099 and the instructions that we referenced, and our rural tax site, which includes a recent article about the 1099 forms. Those might be all things that you want to check out after today's webinar as well. So with that, I think that is all.
Yes, Kevin, we do have some Q&A here that we can kind of talk about here a little bit as well.
Sure.
Are you able to see that?
Let me click here. Yes.
Okay, this first one, I'll just read it for everybody in case that they don't have that pulled up. As a non-farming landowner, do I need to send a fence contractor a 1099 for fence building? I'm assuming that's fence around a building. And I guess my immediate response to that would be, are you in a trade or business? Are you assuming that you're not farming? Are you renting? If you're renting this property out, then I would say yes, you do. If it's purely a personal, like an acreage, where you're not taking any, there's no business income and you're not operating a trade or business on that, then I would say no. Kevin, what do you think?
Yeah, no, I would agree with that. I think it's important to determine if it's a personal expense or if it's a business expense.
Okay. Next one, for issuing 1099s, this includes crop consultants. The line is that they are incorporated with exceptions mentioned as legal, accounting, vet. And let's clarify one thing. The exceptions to that were legal and veterinarian. The accounting wasn't in that. It's only lawyers and veterinarians. Question is generally how IRS tracks income of corps. As a general rule of thumb, Elizabeth, corporations are under much more stringent guidelines to get all their income reported on a corporation return as opposed to a sole proprietor, and that's largely the reason why they have normally been exempt from the 1099 reporting.
Yeah, and I can take the next one. So it says, I see the fire program on the IRS website. I do not see Iris. Is that name correct? Let me go back here. So information return intake system is what it is. So it is Iris is the name. I don't know if because they're planning for it to be available early next year, you may not find a lot on the website about it. I would think a Google search of IRS should show some information about it, because when I was getting information for this presentation ready, that's when I came across it. So I would say it's kind of a wait and see, and hopefully some more information would be available soon.
All right. And then this last question from Robert: if a farmer is buying equipment from a non-incorporated individual, do they need to give a 1099? The short answer to that is no. You don't have to. For equipment purchases, that's not going to require a 1099. And let's see here. In the event that a 1099 sent to a contractor is returned to farm due to incorrect address, is there any follow-up the farm is required to do with IRS? Kevin, let me take a stab at that one and let you jump in on that too. First of all, you want to make sure if by the way we're supposed to do it is you're supposed to get that W-9, and that W-9 is going to have the address and the tax ID number and everything. If the address happened to be wrong on the W-9 and you send it to the incorrect address, keep all your paperwork, and that's going to allow you to get out of any penalty that you're going to get issued. Now, if somebody just had a typo on it and accidentally sent it to the wrong address, correct it and get it sent out as soon as possible and document everything. If that's the only 1099 that they goof up on, odds are they're not going to penalize you for just that one.
Yeah, no, I would agree with that.
So we did that one. I think we've got the oh, here we go. You're welcome.
Yeah. And we did mention about kind of working with a tax professional during the year, and we mentioned about some other articles on the rural tax website. I know one that I've looked at a decent amount recently was how to choose a tax preparer. That was something recently done by Dr. Cushing from Florida. And that just talks about, maybe some questions that you want to ask if you're sitting down with someone, things to consider if you're looking for a new preparer, whether or not, they're maybe more conservative in how they approach tax issues, or they're more aggressive, and does that line up with some of the things that you think and want to do with your business? But that might be another article that you want to take a look at if you do not already have someone that you work with in your business. But as we said, I think a lot of those articles are going to continue to be updated. So other than the IRS website and maybe that 225 guide, I think the rural tax website, you may always want to consult that if you've got some kind of a farm tax issue.
And there was a question about some of the other websites that were mentioned at the beginning. It's farmers.gov/taxes.
And as far as the question from Robert on what's the penalty for paying an employee as a contractor, for the most part, it's just the payroll taxes, but the penalties. But Robert, I want to point something out to you. The worst penalties on the books are payroll tax penalties, because what will end up happening is this is something that if it gets caught, you'll have to go back to the year of whenever it happened, and they'll have to, you'll have to go back and reissue W-2s. You'll have to pay the FICA and the Medicare, and the late penalties for that are really bad. I've seen people that have paid didn't do their quarterly withholding, and they had a substantial amount of withholding and everything, and they essentially doubled their number that they had to pay in because they didn't pay in a timely manner. So mainly it's going to be just the payroll withholdings, plus it's going to be the aggravation. You're going to be issuing corrected W-2s to the people that you have working for you, and they're going to be mad at you because they're going to have to go and refile their returns because their returns are going to be wrong. What Kevin mentioned earlier about, seeking professional help, in a lot of my teaching that I do, I have a slide that I oftentimes lead with. and it says this: be a good consumer of professional services. What Kevin and I are both work with tax schools where we work with a lot of tax professionals, and one of the scariest calls that I get is I'll have a producer that'll call me, and they are in the process of doing their farm return with TurboTax or one of the over-the-shelf, off-the-shelf tax software programs that you could buy at Walmart or Best Buy or any of those other places, and they really don't understand all the intricacies of doing a farm return. And yes, it costs a little bit of money to go have somebody do your return for you, but I really think you do yourself a disservice if you try to do it yourself, because very seldom have I ever picked up one of those returns where there were not a lot of mistakes. And oftentimes it's to the farmer's disadvantage to do it that way. And there you go. Kevin's got there's our contact information. I guess my contact information, and Kevin's is on the slide before. And Kevin, if I'll be so bold, I mean, Kevin and I are doing a lot of tax schools right now and everything. Probably, I don't know about you, Kevin, but the best way to reach me this time of the year is email. If you try to call me, you don't stand a very good chance of catching me.
Yeah, no, I would agree with that. And I would say, depending on your particular state, you may want to check with your own extension program and see if they've got any of these type programs going throughout the year. I know for South Carolina in the past year, we've done like a timber tax webinar, we've done a farm tax webinar. So if you'd like more education on this, I mean, certainly keep up with these farmer education, farmer webinars that have been going on here, but you may want to check with your state extension service as well.
I agree. All right. Well, Sarah, do you have any other questions or any concluding remarks?
Nope, just thanks everybody for joining, and be on the lookout for an email with the recording and slides and any extra info in the next couple of weeks. Also, please keep checking farmers.gov/taxes. We do webinars all the time. So there'll be lots of other ones, and there's also prior recordings on there. So check it out, and thank you all for joining.